Good morning, traders. Chris Buzz here with your morning look at markets for Wednesday, June 23rd. Taking a quick look at futures. Equities are flat. Oil's up 1%. Copper's up 0.75%. Starting to see a reversal there in copper and starting to see more activity in the copper names, Freeport, Southern Copper. You may want to take a look at that. I'm going to take a more detailed look at it later today, but we'll see if a durable bottom has been put in there on copper or if it's just a reflexive oversold bounce. That'll be yet to be determined. On the macro front today, we've got mortgage applications, new home sales. We've got a flash PMI number coming out. We've got oil inventories at 10:30, and we've got that 5-year bond auction later this afternoon. I believe that's at 1 o'clock. Also, we continue to see a bunch of Fed speakers all this week. I think you can pretty much count on 2 or 3 every day for the balance of the week. We had Jerome Powell on Capitol Hill yesterday providing some testimony. I didn't listen to the whole thing, but from what I understand, a softer tone, maybe trying to walk back a little bit of the stuff he said during his FOMC announcement last week. And I think at least if the price action is to be believed, that a lot of the concerns of last week have pretty much dissolved as we grind higher here. So let's take a look at the charts, find out where we're at. I've got a bunch of trade ideas and follow-ups at the end of the video, so we'll take a look at that as well. So SPY 2 hour, we came off the bottom of last week. We consolidated here after this move, and then yesterday there was a nice opportunity. If you were, focused on active trading and were interested in SPY, you had a nice opportunity right here to jump in on the long side at 420 with a stop just below, and then another easy day of trading. Why? Because there weren't any shakeout candles, reversals, all that crap. Price action does during the day to test your patience, test your mettle, scare you out of a good position, and then 15 minutes later, why did I get out? I should have just stayed in because it reversed yet again. But you can see here, strong candles to the end of the day. Now, going forward today, you can see that we popped out at the end of the day up to 424, which was this prior high right here, and then that was rejected and price pushed back down below 423. So for today, I think if you were to look for an objective, bulls want to see 423 taken out and then 424 taken out, and that would be your last resistance point on the way to new highs where there's no natural sellers. So let's say you're not in. I think you can buy a break above 423, and then once 424 is taken out, assuming that it is taken out, then you can quickly move up your stops to just below 424 and look for higher ground. Now, don't forget that we've got a measured move target off of this double bottom low that projects to 428 as a technical target. And you'll recall, you may recall, hey, last week you said it was 429 was the target, and I marked that on my chart. Well, last week was before the dividend that was paid out last week, so that changed all the numbers. So now our technical target is 428 on that double bottom measured move. So that's what we're looking for as a first target if we take out this 424. Getting more granular on the 30-minute chart, here you can see the push up to 424 and then the rejection back to 423. So that is your pivot today. You know, you don't want to see 423 fail. If it does, you could come back here to 421.50. So use 423 as your pivot, and then if there is some kind of a gap up this morning, then I wouldn't take it in the middle. I would wait for either a backfill of the opening gap back to 423 or a move above 424 to take it long, because, you know, as we always say, if you're in the middle of the range, it can and will do anything. You know, it can go up to 424, get rejected again, come back, fill the gap, and then, you know, there's the tendency to get either whipsawed or frustrated inside this range as price resolves. So hold your fire, stay calm, wait for an objective level, either on a breakout of 424 or a back touch of 423. That way you can set your stops at an objective level, and then you won't have to wonder, you know, what to do given the price action that follows. Qs, good day yesterday, up 1%. Just blasted up out here, took out the prior high. And remember, just a rule of thumb, break out to new highs, you got to buy. Why? Because no natural sellers above. And if price has proven that it can take out that prior high, then the odds are in your favor to be long. So even if you didn't get, you know, any of this stuff in here at 344, then you had a good chance at 345 to get long. And, you know, we can see it here on the exploded view. We had this line here at 343.75. That was a good objective place to try along. If you got that, then you got this move up here towards this prior high, and then the breakout, you got an extra 250 or so from 345.75 up to 348. So that was a really nice move yesterday in the Qs. You know, what we've seen lately is if one or the other is going to work, either the Qs or IWM in terms of outperformance. If there's a rotation towards, you know, cyclicals, financials, industrials, the reopening names, you're going to see IWM outperform the Qs, and then vice versa. Yesterday was more of a tech day. The Q or IWM did advance, you know, 0.45%, but it wasn't, you know, it wasn't where all the action was. You can still make money. There was still a chance to get long on this move down and recapture of 225.50, and then you got a push up here of a couple dollars. Now today, I think your pivot is 227.50, right above this downtrend line and right above this lateral support level. If it can hold 227.50, I think you've got a chance for 229, and then if 229 gets taken out, you've got a chance for 231. So this is still a, you know, a constructive setup, but if we fall back below 227.50 and back below this trend line, that would make this look like a false breakout here, and then price would be subject to backsliding back into this 225.50 area. So kind of a key spot right here. If price can move higher, it can, you know, break this downtrend resistance and get back on the right side of the chart. We've got RSI still rather weak. It is trying to make a move out of the bearish regime up above 50 and get positive. You can see the momentum here still is pretty weak below the 0 line. So there's still work to do on the upside for IWM to get, you know, more secure footing, if you will. Here's an exploded view. We had this back touch early in the day, which was a nice place to get long, and then really easier trading from there. There was some hesitation here for a couple hours, but there wasn't anything there that would lead you to believe that you were wrong if you were long. And then you got this breakout here above 227.50. So there's some room to the upside here. Just we got to see if it can do it. Notice here on the shorter time frame, we have broken above the 0 line. So we've got positive momentum, and we've broken above the 50 on RSI. So we've got some positive RSI. So on the shorter time frame, things are shaping up and looking better for IWM. And if that can translate with another day or two of positive price action, you'll see that move over into the 2-hour chart. Before we get into FATMAAN, I want to welcome any new visitors to my content. I really appreciate the time. Hit the subscribe button and the like button. That way you'll get all my content going forward. There's a couple of links in the show notes that'll take you over to the blog site where you can read in on some other information. If you decide to join us, then you'll get an invite to our trading room, and we'd love to have you in that as well. Longtime subscribers, I really appreciate your support. Please do me a hand, do me a favor, hit the like button, leave me a positive comment, pass the link along, help me grow my channel. We're starting to make some progress, and I really appreciate that. We've had a number of new subscribers lately, so I appreciate your help in that effort. So there was a lot of nice price action yesterday in the FATMAAN names, as you know, tech reemerges, as you know, with some strength, with the rates coming down, and we saw that yesterday. So let's take a look. Facebook 60-minute chart. We've been watching this $8 range, you know, with visits to the top and bottom multiple times. Yesterday, we started the day above 330 and then worked our way higher and then broke above the midpoint at 334. And even if you were not involved down here, the break above 334 was a buy point, recapturing a level from below. You've also got the moving averages below as support, and you can see them all turning up. And then from that point on, there was a power move to break above the overhead resistance at 338 and had a really nice close. So now we've broken out. We're at all-time highs. I got long on this breakout here above 338. I've got calls. So now, if you were involved down here, what I always like to recommend, and time frame is everything, so always keep that in the back of your mind. Roll up your stops and your strikes to the new pivot level. And the new pivot level is now 338 at the prior high. So what we want to see now is price go higher and not return to this $8 trading range. Why? Because if we go out and then come back, that'll be a false breakout, and then your target's going to be back down here at 330. So we want to see 338 hold. It can come back and back test the breakout. That's fine. Happens all the time. But you don't want to see price come back into the 337s and 336s. That's a bearish technical event. So looking for higher prices on Facebook. And remember, our measured move target would be the $8 trading range added on to 338 gives us 346. So that's our measured move target on this breakout, 346. So let's see if it can do it. Apple, nice price action again. Just more or less up all day. Got through this 132.60 level. Came up here. Made a tag of 134. Backed off. So within this process, we're back in the channel. See, we dropped out here. Then we came up. There was some resistance here at the bottom of the channel. Then we drove higher. So now we're back inside this rising trend. And so today we want to see price extend the move up, take out 134 and go higher. Strong RSI, strong PPO, both in their bullish regimes. Here's the daily chart that I wanted to show you. And here's that sticking point. These prior highs right here proved to be a problem several weeks ago. So now at this 134.25-ish level, that's the next level of real resistance. And if it can pop that, then I think we've got a clear run to 138. And if you had gotten long back in here, where we talked about at this 128 level, where all the moving averages were below, now you can see all those moving averages curling upward with price riding the 8 EMA in purple. It would probably make sense to, at this 134 level, if it can clear, that would be a decent place to roll up your strikes if you wanted to, or if you prefer, 138 would definitely be a place where you'd want to make sure you got paid for that move. I always hate it when you're sitting with embedded gains and then you get up to a resistance level, you think it's going to break out, and then the market reverses with all your embedded gains on paper, but you never made sure you took any of that money to the bank. So I would say at this 134 level or 138, and if you took it on the breakout of 128, you're $6 to $8 to the good. That can add up on a couple 2 or 3 contracts. So make sure you get paid on Apple if you're in the trade. Tesla not doing anything, stuck here below 625. I think that's your pivot. If you break above, you can look for 640. And as we've discussed in earlier videos, your second target is going to be 655. So hasn't done anything wrong. I mean, we broke out of the downtrend channel, which is a positive technical development, but obviously we see a sticking point here at 625. And, if it can break that, then, we can look for higher ground on Tesla. Microsoft continues to grind higher, which I'm happy to see because I'm long. We're at new highs, breaking out of this $6 gap zone where there was some trading done. We had an impulsive move higher. What was that? Must have been Monday with a flag. Then another impulsive move higher, and then grind higher towards the end of the day. I've dropped in a little level here at 264. I mean, there's not a lot of support there, but I wouldn't want to see price come back, break 264, and then break this wedge, because then it could be all the way back to 262. And if you're long there and you've got short dated calls, you're going to want to make sure you get paid. You don't want to just see it all backtrack. But if you're on a longer time frame, if you're out a month or two and you bought the breakout to new highs, then you just stay long against 262 at the top of this old gap. And as long as that holds, you're in good shape. That would simply be a back test of the breakout, and that move happens all the time. So I wouldn't get too worried about that if you were, on a longer time frame trying to swing this on the breakout to new highs. But Microsoft looks good. Amazon looks good. Had the free 50 club yesterday. Had a chance to get in down here towards 34.40. I think, what was the low? Says the low was 34.56. So maybe that was a tough trade to take there. You didn't get a full back touch here at 34.40, but regardless, got over a $50 move to take out 35.50. 3,500, and now we're looking for 35.50 on the upside. Recaptured the channel, which is positive. So Amazon has been showing some nice strength, much easier trading this than all of this chop. But remember, we had it the whole way with identifying these levels here and knowing where the convergence on the daily chart was on Amazon. I want to show you just to keep things in perspective, on the daily chart, we're challenging the old highs. We're getting up to that level, that 35.50 level. Here was the earnings high where they faded it the whole way. We've had baby runs at 35.50 in the past. They've always failed. I'd like to think this time it breaks out. It may spend some time here consolidating, right below 35.50 while it makes up its mind whether it's going to, blow out the top or get rejected. I wouldn't be surprised after this run here if it hesitates. But here's what I want to say. Even if you've never traded Amazon in your whole life, you get a breakout here to new highs at 35.50. You want to get long, because let's look at it. If you look at the whole trading range, if you were to envision a box, you know how I like boxes. This whole trading range from 29.50 to 35.50, what is that? $600. 35.50 to 29.50, that's $600. $600 added on to 35.50 puts you north of 4,000. That would be the measured move target on a breakout to new highs for Amazon. So, that's the kind of thing where if you're not an active trader, if you're a position or a swing trader where, this is just really not your thing, all this chop trading where it's hard to camp out in a position. You break out above 35.50, that's a level where, okay, big line in the sand, As long as it holds the breakout, you want to be long. And it will grind, it will pull back, it will do all kinds of things. But as long as you're above 35.50, you're fine. You know, it may back test the breakout, it may go up, it may come back, but with a measured move target, $500, $600 higher, that's where you can make some real money in Amazon. And what happens is all this action here has been consolidating that prior move, and now energy is building for all this time and getting ready for the next leg higher. And that's where you see, you know, it took a year to go up $500. Once you break out, the trading gets easier because all this consolidation, then there's energy behind the move, and you could see $500, you know, in a couple months in Amazon if all the stars align. So I think that's really a place where swing and position traders want to get long on Amazon. Google, you know, decent day, up 0.5%. We've got this level here at 24.50. If you're long, if you got long at the low, stay long. If you're not in it and you see a break or you alarm 24.50, you get a breakout there, you buy it and look for the next leg higher. If you want to think about this area here as a consolidation range, or if you want to look at this and say, hey, that's a double bottom low, what you're looking at is a measured move from 2400 to 24.50. So you're looking at a $50 move, measured move. So you're looking for 2500 on a breakout here of 24.50. So Google continues to look good. Netflix, if I can get it to fire, had a little activity yesterday. We've been, you know, I been kind of complaining that, you know, just nothing happening. And yesterday we did see something happen, up 2.4% with this big impulsive bar. If you had, you know, 500 alarmed and you actually took it, kudos for you. Now you can move up to 507.50. But here's the deal. This is a big base. 515 to 485. How much is that? That's 30 bucks. And it just so happens that our gap is 35 bucks. So any way you look at it, a break above 515, whether you want to talk about a measured move of $30 out of this base, or you want to look at $35 gap, you want to get long at 515, because that means we would have taken out all this basing action and we're in open running room on the gap. So make sure you got 515 alarmed in your system. If you're already in, you're in the catbird seat. If you're not in, take it at 515 long, and then you can just stay long against that level and hope for a fast gap fill up here. And don't forget, there are some intermediate points that may prove to be, you know, sticking points. So it's not going to be, you know, just a unidirectional move up $30. I wouldn't think $35. You may see little hesitations at these intermediate levels, but don't let that scare you out. And actually, you could use these levels as levels to roll up your strikes if you care to do that. You know, at each successive level, they're about $10 apart, just as a coincidence. So you get long at 515. You can roll up at 522, then you can roll up at 532, etc., all the way up. So you're banking the whole time. You're banking you're banking the moves. Semis have not been very energetic, let's just call it that. But at 248.50, we recaptured that. On a technical basis, you can be long against that level and then look for a move to 252. Let's quickly go through some recent trade ideas and a few new ones. We had talked about CrowdStrike yesterday. Got a big move yesterday, 8%. And we talked about getting long here at 225, 230. If you're in that trade, you took a gut punch on Monday with a snap move down, but that could have been jarring, but you would have not been stopped out. That's my point there. If you had gotten long at 230 with a stop below, you'd have been royally pissed off at this gap down move. You can't even see the candle because it went all the way down for a touch and then closed back at the open, which was positive price action. And then yesterday you got the big move. Now, if you're in the trade, and I hope you are, roll up your stops, roll up your strikes. You're 25, 30 bucks to the good already. I would move your stops or your strikes higher. Make sure you take this money to the bank. Now we're up here around, what are we at? 256. We still got a ways to go on this measured move, which is up towards 300. So stick with the trade. We took out the prior high. So now, what is that level? Let's call it 247.50. You don't want to see price come back below. That would be a line in the sand for me at this prior high. But looks like we're going higher. That's been a great trade. Pins, we talked about getting long into this gap. Got a big move and a follow-up move. Monday we had the down day. But, we're still just riding the 8-day. So stay long. Look for the gap fill up at 77. I still think that's in the cards. PayPal, talked about getting long on this breakout. We're starting to see that move. So if you're long against 275, I'd stay long. And you're going to be looking for something around 300, 305 as a target. And I think that's very achievable if the market holds together and tech continues to advance. So that's been a nice trade. Yesterday, I pointed out Costco on the breakout to new highs. New highs you got to buy. $10 wide consolidation for the better part of 2 months, right below the prior high. And that's typical of what you would see when you get back to a prior high. It's positive in the sense that it didn't hit that high and then collapse. You see that sometimes on a double top. So it was just hovering. You put your alarm in there at 387. It fires. You get long. So I'm in this trade. I told you, I think I'm in July 390s, I think. So it's heading in the right direction. I like this setup. I like the fact that PPO is resetting. And I like the fact that RSI never lost 50. Here's another one. Carvana. Yeah, should have got it here, but we didn't. Now we broke out of this range, but now we're at the prior high. You can alarm 315 in your system. Same setup as any other breakout. You take out the old high. You got to buy. So you can get long against 315 with a stop below and see if it can continue its advance. And if it if it oscillates here, then that's fine. You're not in the trade. If you got a pullback to 300 back here to this support level, that would be a place where you could take a long at 300 with a stop at 295 against all this trading range. That would be a decent place to get long if you didn't get it right here. So $65 trading range, that would put price on a measured move basis up towards 365. So nice risk reward to the upside on that. TWLO downtrend, lateral resistance, got a little breakout yesterday. I saw a lot of guys in the option chain shooting for 380, a 380 by 400 call spread for Friday. I mean, that's a risky trade from the standpoint of, any kind of hesitation or pullback, you'd lose. You just run out of time. What I'd rather see you do is, get something, at least a week out. July 2nd might be nice, and just hope for a follow-up move. You can get long against 370 with a stop just below and look for follow-through. It all depends on how much risk you want to take. Do you really want to get something for Friday, or do you want to get something, 10 days out where you can tolerate a red day or a day when it really doesn't move? When you only got 3 days to expiration, I mean, you can watch the time decay on your watch. It's just accelerating, and a lot of times you're right, but you lose because you just ran out of time. So I like that setup. CTAS. I did not have this one alarmed, or I would have let you know. I ran across it in my chart work during the day, later in the day. So I thought it was not really that useful to send it out to you. But breakout to new highs after a long consolidation. I think this is going to go higher. If you were to get a pullback into 365 for a back test, I would hit that, and then you got a really tight entry. Or if you got even, a half back, a pull into 370, something like that, where you can, take an objective position. But here at 375, you got $10 of risk just in that candle. So you'll have to judge, how much risk you want to take. The optimum setup would be on a back touch at 365 to get a really objective level. Moving on to the marine shippers. Here's the Baltic Dry Index that is a measure of shipping rates. And you can see here we're at 10-year highs on the Baltic Dry Index. I think this index is going higher. Why? Because in the early 2000s, when commodities were going crazy, there was a big investment in marine shipping. A lot of new tankers came online and stuff. But since the great financial crisis, when prices, went to the floor, no investment in tankers for the last 10 years. And of course, during that time, the older tankers have been scrapped. So very much like the whole commodity complex, there has not been a lot of investment in tankers when, the rates are, 300 and 700 and 400. So we've been in a range here for 10 years, and now we're breaking out. So I expect this to continue higher with the demand surge. and then that's going to be positive for the marine shippers. Here's a chart on DHT. Weekly, this is labeled wrong. This is a weekly chart. I apologize for that. Set yourself an alarm at 675. You get a breakout to multi-year highs. You can take that long at 675 and look for higher ground. Here's Navios Marine. Nice, tight, symmetrical triangle. You can see the coiled energy forming. You can see all the moving averages clustered together. That has worked so well for us in the past. You get a breakout here with all the moving averages below. I like that setup. Your first target will be 1050, and then right on up towards 14 if you can get this breakout here above say 9. Make a clear break out of this triangle with all the moving averages below, with RSI breaking above 50, with PPO breaking above 0. I like that setup. If you're looking for a marine shipper, that's an idea for you, but there's a bunch of them out there. Not going to run through the tickers. We're running late. So lots of ideas there. Longer video. Hope you found the information helpful. I hope you guys have a good day of trading, and I'll be shouting back at you when and if I see something notable. So have a good day of trading. Talk to you next time.